Good morning, everyone. Today is Thursday, May 25th. Thank you so much for joining into our weekly AHCA/AHCA webinars. These webinars were developed to keep you informed and to get your questions asked. So hopefully you find them useful. We do have a couple of new folks on the call today, so I just wanted to take a few minutes to introduce myself. My name is Deb Wilkinson, and I'm the Vice President of the Health Plan Options Department here at URL Insurance Group. I oversee the group health markets and what is left of the individual health markets in the state of Pennsylvania and in some instances nationally for group health plans. Again, it was meant to get your questions asked and answered. So you can ask your questions in one of two ways. You can either raise your hand icon in the control panel to the right of your screen, or you can type in your questions in the question box, and I'll answer those at the end of the webinar. Just with a show of electronic hands, if you can see my screen and hear me okay, if you can just raise your electronic hand, awesome. I love to see the hands going up because with me, it's never a sure thing with technology. So let's just jump right into the agenda. As we all know, the AHCA passed the House Monday the 8th of May, and it has to be sent to the Senate before anything happens. Just this week, Speaker Ryan said that he's not sending it over to the Senate until the CBO rates the AHCA, and of course, the agenda that I prepared yesterday had to come in and change it because this just in, the CBO did release their report. And I say this just, as maybe an aside. We know that the CBO with the the Affordable Care Act was not quite accurate. I'm not sure that they're quite accurate with this either. They are supposed to be a non-political entity, but I don't know that that is actually the case. But their report says that $119 billion will be saved over the next 10 years with the AHCA. It does go on to say about $23 million will be displaced due to changes in Medicaid limits and some of the other provisions. Premiums are expected to be higher for the older folks and those that may be sick because of some high-risk pools that may be put into different states, and could be lower for younger folks. And I add, my flowery blah, 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 because again, I'm not sure how much of this is even going to be accurate. Bottom line, it does have to go to the Senate, whether the CBO rated it well or not. There was a reporter that was interviewing Senator Ben Sass from Kansas last night, and he was adamant that this American Health Care Act, as it is now, will not stand. They'll rip it apart, which everyone expected, and hopefully spit something out that could pass and that could give every American and every sick person and uninsured and those that are in need the appropriate level of care. So hopefully we get something good out of this, but it is going through the machinations of the federal government, so we'll see how quickly something comes out from the Senate and what really remains of the American Health Care Act. There are proposed changes for SHOP plans starting with enrollment for 1/1 of 2018. And for those groups that are currently in the healthcare.gov SHOP system, they can remain. For those that will be applying for a 1/1/18 effective date and beyond, the employer would still need to go in and verify their eligibility through healthcare.gov, but application and administration would take place from the insurance carriers themselves. So I do think that helps or will help. If there are even any SHOP plans left, who knows what's going to happen for 2018 product offerings. But I do think this is a positive because any group that is eligible for those small business tax credits, or that wants those plans that are available on the SHOP, really had a struggle trying to get them through. It was just a clunky system and did not work for various reasons. So let's hope that this is an improvement and there's something to actually sell as far as shop products. The cost share reductions, the Trump administration asked for another delay, a 90-day extension with the Federal Appeals Court. Of course, every carrier is really anxious to have some sort of assurance, if you will, in writing that these cost share reductions will continue. You know, until then, the carriers have to kind of almost plan for not getting the cost share reductions, and they're filing their plans. In fact, they're filing their plans this week, and actually on Monday they filed them. So, you know, it's difficult, I'm sure, for carriers to try to figure out how they want to rate themselves, not knowing if these cost share reductions will continue. But the subsidies for the cost share reductions cost approximately $7 billion just this year. And they say that any elimination of the cost share reductions could result in rate increases of 15 to 20%. So again, you know, this may be a moot point by mid-year if anything on the American Health Care Act passes, but at this point it just seems to be a bone of contention and offers more turmoil in the market, which nobody really needs. But interestingly enough, I did, in my newsletter that comes out today around 10 o'clock, a copy of my blog that will be going out tomorrow is attached. And I talk a lot about turning this turmoil and uncertainty into a resource or an advantage for you to gain new clients. So, you know, if you have a few minutes, take a look at the blog, and hopefully you find that useful and inspiring to make lemonade out of lemons. Senator Lamar Alexander, from a Republican from Tennessee, is proposing a phase out of the individual mandate as opposed to a sudden elimination of the requirement. I don't know how popular this will be. As long as that individual mandate is in place, there has to be some level of qualified coverage, some penalty assessed. So it's kind of delaying the inevitable, but we'll see how that all pans out as well. For those of you that are doing fixed annuities or anything in the investment segment, the DOL ruling for the best interest of the client will move forward June 9th. They're not going to further delay it. It will move forward. Joe Corio, who is our Senior VP and heads up our Annuity Solutions Division, will have an update webinar next Thursday, June 1st. If you're interested, you can go to our homepage at urlinsgroup.com, and if you go into the homepage, you can see the current events or upcoming events and register for that webinar. Or you can just shoot me an email, and I'm happy to send you the link. The Cap Blue Cross commissions for individual and med supp, they are delayed again. Just can't seem to get it right, and we're as frustrated as you. It does look like, pardon me, this third attempt is correct. And I just talked to Brandy Coleman, our Director of Commissions, this morning, and she is hoping to have them paid with the regular commissions the last date of the month, but you know, jury's still out on that, unfortunately. We're getting them adjudicated as quickly as possible, and unfortunately it just is a real big mess. I always have to love it when carriers decide to change their commission systems during fourth quarter. Makes no sense to me, but and you know, unfortunately we're the ones, you and URL, pays the price for those new systems and the kinks. So let's move on to Aetna. Effective immediately, the Aetna Funding Advantage quote for 15+ enrolled will use the GRX system for rating. So there's no longer the requirement for individual medical applications. So that's a good thing. UPMC, for those of you that are writing in the western part of the state, UPMC for the 51 to 100 market is coming up with 2 different rate cap options. And essentially what it's doing is option one, and again, the information's in my newsletter that's going out, but option one, it looks like they can cap renewal in the Advantage portfolio at 10% first year, 12% second year. There's another option where if they renew with a Healthy You product or take a Healthy Step on their first year renewal, then they get a 6% rate cap, and second 8%. But again, there's stipulations and requirements in order to get those. You know, it's kind of funny when you consider a 10% increase cap as a positive and a 12% for second year. So that to me equals a 22% increase in 2 years, quite frankly. So, you know, again, it's something that if you want to take advantage of it and it works out for your clients, then it's there for the taking. And that's for 7/1 effective date through 1/1 of 18, the renewals. Highmark's new Elite Brokerage Bonus Program, I did send some information out. I'm going to go to a different screen. The reminder went out again yesterday, and at the bottom of the news, the reminder was this special code here. Some had trouble finding it within the email. So it is a program that I think can benefit all of you. It's for every group that you write, and there's a brochure that was included. You get a point value, and the point value can be spent for, you know, all of these items, which is pretty exciting in my opinion. You can, you know, get airfare, tickets to sporting events, concerts, apparel, shoes, jewelry, you know, every Bass Pro Shops. You know, again, so there are things in here that people use, and why not? If you're writing them, get those points and start spending them. Every Wednesday they have a real deal that you get a low cost or low point cost item. Again, here is the code that you need to register. So take a few minutes and register. If you need that link again or the information on how to register, just shoot me an email or give me a call, and I'm happy to send that out. It doesn't cost anything. It takes a few minutes to register, but it is to your advantage. The points are already accumulating for any Highmark business, but until you register, you can't, they're not yours to spend, and you know, again, it costs you nothing except a few minutes of your time. So take a few minutes and register. So a lot of acquisitions going on in the general agency world. So if you are looking for a new general agency, I would ask that you consider URL Insurance Group. Let us quote your group. Let me talk to you, and let you know, my team talk to you about how we conduct business here, and you know, the benefits of doing business through URL. There is a Gemini Bonus program that was at $50,000 last year. We're currently now at $40,000, so you can see how you know, we have several months left in this year that it could exceed what we were able to offer last year. And as a Gemini partner, for every group written, you get a portion of that Gemini bonus, and that's just extra money for everyone. Last year, we paid an average of an additional $23 per employee as a bonus. So you can imagine how that money adds up, that bonus money, in addition to your commission. So again, if you have questions on our Gemini program, or just, you know, being a valued standard agent with our general agency, give me a call and let me tell you all about us. That really brings us up to the open forum where you can ask your questions. Next webinar is Thursday, June 1st, same time, 9:30, and I hope you're able to join us. Let's see what questions we have today. All right, why can't I get those? Bill says, do we know if the new rates that the insurance companies have applied for include commissions for agents? Bill, I don't know. All I know is that the insurance commissioner was talking to the carriers, and basically when they file their plans, they have to be very specific about commissions during open enrollment, on products, and during SEP. So I don't know if they've included them because they're, I mean, certainly not public yet, but if they do include them, they have to stay with those proposed levels for the entire selling season. So, you know, again, I don't know if that's going to be positive or not. Jay says, Central Penn Business Journal, they laid off, Cap Blue Cross laid off a large number of employees. That is correct, they did. They have also invested in Vibra in the Medicare market. Does anyone have a clear picture of capital and how solid they remain financially? It would appear they should have at least paid what was owed in commissions. This becomes very, disheartening to anyone out there, and for us to consider why should we continue to have a relationship with capital. What is your opinion, or anyone else on the webinar? You know what, I don't really have an opinion. I know that they, sorry, my cell phone's going off. I know that they have had some turnover. I don't know what the direction is that they're going. I know that with every carrier, they really are putting a lot of resources into the Medicare market. So I don't think it's a financial stability issue. I think it's just more where are our golden eggs versus where are our slowly rotting eggs, if you know, if that's an analogy of anything. So the short answer is, Jay, I don't know, but I don't think, again, that it's a financial issue. I think it's just focusing on what is going to help with their financial stability moving forward. But I will ask and report back to you next week. Let's see if there are any other questions. And that actually looks like all the questions that we have for today. I just thank everyone for joining in. As always, keep your questions coming. There's a lot of changes ahead of us, all of us. And, you know, we're just out here trying to do business, right? So, you know, we'll keep in tune with what's going on and provide that information to you. And, you know, as always, I truly appreciate you joining in. It is Memorial Day weekend, so let's take some time, all of us, to just think about those that have given their lives so that we can actually sit here in our offices and talk about the advantages and disadvantages of a silly law. So again, enjoy your weekend, thank a veteran, and we'll talk to you next week. Bye-bye.